Hello and welcome to another Tech.eu interview. My name is Robin Wouters. I'm the founder of Tech.eu. And today I am chatting with Pedro Barros. He is with Target Global. We'll get into more detail about his role at the company in a second. But before we do, I wanted to say welcome to Pedro and, of course, for taking the time to chat with us.
Hi, everyone, and thanks for having me, Robin.
As I mentioned, Pedro is a partner at Target Global, which is a very, very notable European investment firm, international investment firm, more than 3 billion euros under management, invested in over 100 companies, according to its website, probably a lot more than that in the meantime. And Pedro is not only a partner, but he's also the head of fundraising and investor relations at the firm. Did I get everything right, Pedro?
Yeah, so far so good.
So far, so good. Awesome. Can you explain a little bit more about what that actually means, your role within the company?
Yeah, sure. Target brought me on board almost 4 years ago to um, basically institutionalize the DLP base, help us, grow to where we want to be. And so, my day job is to raise the funds that we manage. But also syndicate our co-investment opportunities to our investors and a little bit of portfolio management and liquidity planning.
Fantastic. Well, thanks again for taking the time. We are recording this on the 10th of March, a day that I think will be remembered for a while because everything that's been going on with Silicon Valley Bank. Have you been paying attention to the news at all this morning?
Yeah, I've heard about it.
Without maybe getting into too much detail, because I don't know if Target Global is actually a customer or maybe exposed in any way. Um, does this mean anything to you? Does this have any effect, or is it just following the news like everyone else?
Look, I think on us directly, there's no effect because I mean we're not a customer of them directly, but I'm sure some of the portfolio companies do business with them. They're very prevalent in the tech scene. Um, I think um, I think the impact is not so much of the direct impact of anyone that may or may not do business with them, but it's the way I see what's happening. In a crisis or in a downturn, there are kind of secondary problems you don't foresee, and I think Silicon Valley Bank is one of those, right? I think when everybody saw the interest rate hikes, people thought about valuations and funding rounds, and nobody thought about the banking system and what that would do with the banking system, and now we know.
Yeah, and it remains to be seen what the spillover effect is going to be on Europe, on the scale-ups and the investors here, but also on the banks here, because they're also dipping quite a lot this morning as a result. So yeah, we'll have to wait and see what happens, but it's definitely going to be a day to remember, I think, and not in a good way.
Yeah.
So anyway, let's get back to your work with Target Global. You said you joined about 4 years ago. That means you lived a very interesting 4 years with Corona and everything, and the effect that it had on the global economy and the startup scene. You lived through one of the biggest hype years and the biggest, funding influx in history, and now we have just finished like a year of downturn where you had essentially we saw sort of a scaling down and a slowing down that's been reflected in the numbers. So what's it been like for you?
Well, it's been interesting, I would say. We haven't had a normal quarter since I joined. I come from actually personally I'm Brazilian and came to Europe about 6 years ago. And Brazil is very bumpy and full of crises. And so to me, the road at Target has been fairly normal in my life. It's just what I'm used to. But I would say that COVID was difficult at the very beginning, and then we saw the huge tailwind and the tech markets, and navigating that prudently was, I think, very important. Not doing many things that we regret. I think it was key, but also capitalizing on the opportunity of raising capital, both for ourselves, but also for our portfolio companies. I think during those years, we managed to fund a lot the portfolio. And that's very important now during the downturn.
Yeah, I can imagine. It's been over a year since Russia invaded Ukraine, and all the effects that sort of happened after that, the energy crisis and whatnot. So, if you look back a year ago, was Target Global operating in any significantly different way than it is today, or was it, mostly business as usual in the last 12 months?
Um, Look, I think over a year ago, we were preparing to what we were expecting to be a very tough 2022. Um, I think, I mean, personally, I was changing diapers. My second daughter
Well, that's a good
had
thing.
just been born, so my mind was elsewhere, I would say. Um, but as a firm, we were preparing for a difficult 2022, and I think um, the tragic war only accelerated that, and there's been loads of disruption. I don't think I need to explain um, to anyone, right? So in energy and investor sentiment and so on and so forth. Yeah, so we just had to adapt and move on. I think it also created opportunities. Um, for example, in energy transformation, we've done interesting investments there. Um, yeah.
No, no, that makes sense. Um, you guys invest from very early stage, pre-seed up to pre-IPO, so across all stages. Um, but of course, because of the downturn, a lot of the sort of monster rounds and the really big scale-up rounds have sort of almost vanished, right? So was that also the case with Target Global, where you essentially went, you still kept investing, but maybe not as late as you would used to, or not as much as you would used to in scale-ups?
Um, Look, we're early stage investors that scaled up, um, and I think we have two fund families. We have one fund is essentially a seed fund, and another that does early growth rounds, late A's, early B's, and so on. And that's the core of what we do, and this has remained unchanged. I think our co-investment activity, which is how we were playing the late stage opportunity, has been far more quiet than say in 2021.
Yeah, I can imagine. I think that's for everyone. Um, yeah, so I mean, the exit windows closed. Late stage is, very very low compared to the years before. But the other thing is that the LPs, like the actual fund of funds, are also slowing down their investments. They're not really taking on a lot of new and emerging funds. They're being very careful, even if they weren't already, of course. So, what's that like from your position?
Yeah, I think exits are so. First on what you said about the exit window being closed, I don't think that's entirely true. We've done many last year, for example. It is more difficult, certainly. The IPO window is closed, but there are other ways of exiting businesses. I think, look, the LPs, right, the fund of funds and pensions, corporates, etc. Um, because tech has been so successful, actually their portfolios are a little bit upside down. The public markets have corrected, but the private tech portfolios or just private markets in general have not. And so they are in general either over allocated or more allocated than they were planning to be for the asset class. and that creates challenges, right? Because there are, as a rule, smaller budgets or fewer LPs active. But I think it's I think the steady will win the fundraising race. Those the LP relationships, they take a very long time to build, many years. And I was actually thinking about this. I think one fund commitment is longer than the average marriage length these days. So it takes years to build, and trying to time the market, the macro cycle will just is just a pointless exercise. So both for the LPs, but also for the fund managers raising capital. So just have to keep at it, building those relationships, and showing how you add value to the portfolios. And even those that are over allocated or more conservative or worried about tech valuations, if they recognize that, they will hopefully not miss the chance to deploy capital with you, because at the end of the day, you only come back to market every few years to raise a fund. So either they do it when you're back or they miss it.
Yeah, true. What do you think is going to be the timeline here? Like from your point of view, when we will see a return to normal? And when I say normal, I mean more like 2020 rather than 2021, which is a year of excess. Do you think we'll have to wait another year, maybe two, until we get back to normal?
I think normal was 19 and 18. Look, we're probably, it's strange to say that today with SVB and all of that, but I think we're probably more positive than the average. Probably from the second half of this year, we'll feel significantly better than it feels right now, and then from there, it's just gonna build. At the end of the day, look, it's about liquidity, and GPs have a lot of capital in the funds sitting, waiting to be deployed. And as the rounds start to take place, and some are happening, especially in earlier stages, as this trickles up through the stages, most fund managers will start deploying capital more aggressively, and the market will recover. Also because LPs don't like paying fees for fund managers not to deploy capital. So at one point, either people will stop charging fees, or will have to start deploying capital in a significant way.
Yeah, the cycle will restart again. Just a matter of when, I think. Now, a target doesn't only invest across stages, but also across geographies, across sectors. If you would highlight a few industries that Target is particularly interested in investing in the next few years, what would they be?
Look, we venture is by and large an opportunistic business, right? The trends move fast, opportunities are created fast. We've done a lot in fintech and software, in tech-enabled consumer, logistics, and healthcare. I'd say those are our core home areas. But there are very interesting things popping up in education, energy transformation that I mentioned before, in sustainability, around kind of protein replacement, for example. Not so much meat, but fish and milk and other areas. And I think everybody is looking closely at AI and trying to understand how to best play it.
Yeah. And what about geographically? Are there any interesting regions in Europe specifically that you're targeting more actively than you were in the past few years?
Look, so we invest, Europe and Israel. That's our core. We try to we try not to focus only on the main ecosystems, like London, Berlin, etc., but also go to other places like the Baltics or Poland, Spain, and I think nothing changed there, especially after COVID. People start interesting companies anywhere, and even remote first businesses, and I think you just have to be on the ground enough, and with people that understand the culture, either are from there, even if they're not based there, and speak the language, and just trying to find interesting things.
Yeah, definitely an interesting environment still. We're going to wrap things up, but I had another sort of final question because we talked about sort of the market sentiment, in the startup world, in the investment firms, in the LPs. But now with Silicon Valley Bank and everything else that's happening, is there a chance that things are going to get a lot worse in your view before they get better?
Well, it's what you don't expect that actually hurts you. It could. Everything can always get worse. We don't think it will, um, but it's possible that it could.
Yeah. Okay. Well, thank you, Pedro, so much for your time and your insights. Let's wait and see what happens with the Silicon Valley Bank story today. But I want to thank you for the time in any case, especially on a day like this.
Thank you, Robin. Great pleasure.
Thanks a lot. Talk soon.
Yeah.